Next one, I want to talk about the value, right? Value stocks. Okay. Last time value stocks used to be more popular lah. Now value stocks not so exciting, right? And all the way not exciting lah. But some people like, because they feel that it's more solid in terms of the stocks that they buy, right? They have real fundamental value. A lot of the growth stock, their value is in the future, which you cannot really see, right? You have to somehow imagine. They are selling you future value today, right? That's what growth stock is all about. But value stock is something that they already have today. Okay, so you are buying at a discount. So some investors prefer this approach. Okay, so it depends on you, right? So value also can have opportunities, right? How then do you form a strategy around a value approach if you are that kind of investor? Okay, if you're a value investor, likely you will focus more in Asia, right? And the way I define value is different. Okay, you ask different investor how they define value is also different. I define value as those very discounted stocks, right? Very, very cheap stocks. Okay. And in general, Asia has more of these cheap stocks than US. Why? Because if you take a look at Asian stocks, right, a lot of them I term that as more traditional. What do I mean by traditional? That means they are in businesses that are usually non-tech, more industrial, right? More bread and butter, maybe in commodity trade, maybe in property development, maybe in F&B, right? All these very traditional industries. Okay, so these are generally where the value stocks are. Okay, not your tech stocks, very exciting, not your asset-like businesses. So they are those antitheses of all these stocks. They are mainly found in Asia. And another reason is also because Asian stocks have not really recovered, right? And US has been very bullish in the last 10 years, I would say. Okay, Asia stocks the last 10 years didn't do well, right? It went up, but it didn't went up as much as US. So it's sort of like under a pale in comparison. So that's why I made a comment that value stocks are less attractive for some of these investors. Okay, but they have opportunities. And I would think that if you are the kind of value investor, Singapore and Hong Kong would definitely be the best place, even at this point in time, to find value. Okay, so I want to give you an example, right? What value stock look like. So let's go and do a screen. Okay, then you will understand what do I mean, and then maybe we can do a demonstration as well. Okay, so let's do a screen, and then we see the what do I mean by value stocks. Okay, you should be able to see my screen, right? I'll just use SG as an example. Okay, but you can apply to any markets. We can see there are a lot of filters here, right? So what are some of the value indicators that you are supposed to, not say you're supposed to, what common value indicators that people use? Things like PE ratio, things like dividend yield, things like price to book value, things like price over cash flow. Okay, they usually have a characteristic, right, that is very consistent. They have a price in the ratio, and then they have a fundamental value. So what you're doing here is that you're comparing price with value, right? As the saying goes, price is what you pay, value is what you get. Okay, so you're comparing these two so that you know whether the fundamental is worth paying for the price. So essentially, that's what a value metric looks like. You compare price to fundamentals, right? And we don't need to screen so many. So I will just use price to book as an example, but all these are usable as value metrics. And price versus book value, okay, of course, you want a price to be lower than the book value. So you want this ratio to be lower. So the lower it is, the cheaper the stock is. We can see without this filter, there are 670 stocks in SGX. So after I apply this filter, we have 554. Okay, and my job is to find cheaper stock. So I lower this number. As I lower this number, you can see this number of stocks reduces, which should be the case. So we eliminate the so-called expensive stock. And there's no point that you lower until like very low. You get very junky stocks, okay, and you get too small number, statistically very dangerous, very skewed result. So you must give enough room, right? So maybe you put a 0.7, you got 260, eliminate 2/3 of the stocks already. So then we look at the stock, right? You might not find all these stocks familiar. Okay, these are so-called the value stocks. Of course, not all are investable. Remember, majority should be ignored. Okay, but this gives you a sense. Any stocks that you see that you know one, any stock, I'll just slowly scroll. You spot anything, you just type in the comment box. Any familiar names? Any company you know over here? It tends to be the smaller company. Okay, Banyan, Ballstate. Once in a while, you have big companies, but majority are smaller. Asian Pay TV, BHG, Hourglass, Bukit Sembawang. Got Hourglass, man? Where H? Okay, Centurion. Right. Any more? PBR, Chip Insing, Guaco. Oh, yeah. So have lah, right? Have some familiar names. Or Hong Kong Land is a blue chip, okay? So majority are small cap, as you can see from here. All right. So what to do next, right, is that you cannot just buy because you screen for one metric, right? Then, oh, okay, all this can buy one. Okay, cannot. Right? You have to do a bit more analysis. Like what actually Chris, if you were in his seminar this morning, right? He did say, right? So you do need to look at the financial statements. Okay. Unless you go his approach very quantitative, then you can skip the financial statement analysis, but you have to put in a lot more metrics to make it more robust. Okay, otherwise you do need to, right? So maybe let's just choose one example, right? Maybe we can choose let me see a hotel stock. Because one of the way is to look at hotel recovery, right? Because COVID is like pretty much done already. Hotel Grand, Hotel Royal, Imperial Crown. These are hotel. I think got Amara, right? Yeah, got Amara. Okay, let's look at Amara. Okay. Burn hand, burn legs before from this list. Okay, later I'll explain to you what are some of the things that you must look out for. Okay, so let's look at Amara. Let's go to the annual report. Find the annual report. Amara. Okay, then let's see whether is it really undervalued. All right, let's use this annual report. Okay, let's open up. 160 pages. Don't need to read everything. Okay, so just zoom in to the financial statements because that's what we are interested in. Oops. You can still see the slides. Let's see the window, right? Because I don't know why it's suddenly got pulled out. Okay, so let's just zoom into the financial statements. Financial statements here. Okay, so when we talk about book value, it is referring to the assets and the liabilities, which is found in the balance sheet or core statements of financial position. All right, so this is where we will do our calculation. Okay, and if you take a look at this, let me zoom in. If you take a look at this, the assets, right? Okay, they have cash, there's receivable, inventories, developed property, blah, 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 blah. Okay. You will know that all these assets quality are not the same, right? For example, receivable means that the customer owe money, haven't paid, but cash is something that the company already holding. Okay, so you know that receivable somehow, yeah, you can say there's like $13 million receipt, haven't received yet. But some customer may not pay you in the end. Okay, so it's not guaranteed you get this money, right? But the money in the bank means the money is in the bank, right? So it's a lot more secure. So what I'm trying to say here is that some assets are worth more than the others. Okay, right? Some are worth more than the others, and we want to give a certain discount. We want to be more conservative. Those assets that are not so good, discount, they don't take the full value. Those assets that are more stable, we take the full value. Okay, so I'll just pull out my spreadsheet so that we can do some number crunching together. Then you get a sense of what value is about. Okay, so cash is definitely more valuable, right? As we establish, cash in the bank means cash in the bank. Okay, $16 million. And there are some inventories also not very reliable because inventories you can just write off on. Inventories, Amara is a hotel, right? So likely inventories are what? Your shower gel, I don't know, your towel, can eventually be expensed away, right? So may not be useful. So you don't have to take that value. Development properties means that they are still building it, not completed yet. The value also iffy one, right? So don't take that. Contract assets, I also don't know what is it. Okay, so don't know better discount. Receiver also don't know. Financial assets means they invest in something. This is the value at that time. Mark to market, right? So this one can change also, not reliable. Intangible assets depends on what it is. Otherwise, just assume that it's not valuable. Wait, this is a group, just to confirm. Investment in joint controlled entities, these are again investment. Investment property, yes, is stable, right? Because these are properties rented out. There's an income generating component, and properties generally valuation quite stable and don't change a lot. Their hotels are parked under property plant equipment, so we need to figure out which value is the hotel. Okay, so it's breakdown here. Freehold property, leasehold land and building, this is their hotel. Right? So it's this value, about 200 million is a hotel value. Okay, so we got about 650 that are good assets. The rest can discount. All right. Then the rest of the number are quite standard. Total assets, total liability, 305870. Okay. And then what we need is number of shares. Because you need to find the per share value, right? Number of shares is 500 million. Okay, let me see what's the share price. Amara share price. 36 cents. 36 cents. How did it move for the past 1 year? Still flat, Okay, still flat. Hey, let's take a look. All right. So if we only take their hotel, some investment property, and the cash, and we minus away their liabilities, okay, we get 40 cents per share value. We discount all the inventories, receivables, all those things, and then the current price is 36 cents. Can you tell me, is it undervalued or overvalued? Undervalued, right? Okay, so this is undervalued. Of course, this is not the only thing you do. Okay, there are some other things that you're supposed to check, right? I won't go through the whole thing because it takes up too much time. The other profitability, other cash flow things, right? To have a complete numerical analysis. Okay, but in general, that's what we try to do here to find the valuation. So we are actually buying their hotels and their properties at a discount. Essentially, that's what it is. All right. Amara Hotel. Where is it? Oh, here. Okay, you can also take a look at what's their investment property. Actually, I'm quite curious, just for my curiosity's sake. Because I only know their hotel. Let me see where's their investment properties. Here, property investment and development. They just say it's a hotel and a resort. Oh, got some restaurant. No, a restaurant is not a property. Oh, the mall, 100 AM. 100 AM. Oh, page 24, sorry. Page 24. I was at page 3, right? Just now. Oh, yeah, correct. 100 AM. That's the mall. Okay, that's the mall. That's their property investment. All right, so you're buying this mall at a discount. Yeah, so then these are things that you can figure out. Of course, these are the part of the qualitative analysis, etc. But most importantly is that, let's go back to our slide. Yeah, let me explain what is it. All right, is that you need a catalyst for the value to be unlocked. So you know it's undervalued, right? Because if it continue to be like nobody knows, nothing happened, then the share price will maintain where it is. Okay, we have done the valuation, right? We know it's undervalued. Okay, But to make money, the price must reverse because now it's undervalued, right? If the price don't go up, we can't sell, right? We want to sell so that you can make a profit. This is not a growth stock, right? Remember, this is a value stock. So if you want to buy cheap, sell dear. Okay, you buy and hold, no use one. Okay, later I explain to you why buy and hold value stock no use one. You need to sell at one point in time. So the earlier you sell, the better you can recycle your capital. And you need a catalyst to unlock the value. What do I mean by catalyst? That means there must be an event such that investors will pour in and buy the stock and push the stock higher. Okay, so what do you think? Do you think there is a possibility that there's an event that can help this Amara share price go up? What do you think? We said yes. What? What is the potential event? Should I say COVID recovery, tourism goes up? Yeah, I know I'm asking the obvious question. End of COVID. Yeah. Shareholder dividend. Interesting. Yes. Even with share buyback, Hong Kong land doesn't seem to move anywhere because Hong Kong land too big already. And Hong Kong land got the relationship with what's going on in China property market. Okay, so there's a lot of bearishness around it. Not so easy. Take over, yes. Or they sell 100 AM, right? That's also one possible thing. Okay, but you need to weigh all these whether they are likely or not. If they are not likely, then yeah, privatization is possible as well, right? They offer, but if they offer at this price, not going to be good. Maybe they give you 40 cents. You buy 34 cents, they offer you 40 cents. Not a big return. Okay, so the best is that you want COVID recovery, tourism shoot up, or they sell 100 AM. Okay, these are the bigger events that can help the share price go up a lot more. Okay, and you also have to find out why actually recovery has already happened, right? So why don't we see the share price improving? Okay, some of the share price I think have already improved already, right? Like Far East H Trust. Okay, for the past 1 year, share price will go up, right? About 7%. Haven't count dividend yet. Okay, your Amara was flat. Right. Another one is HPL, right? Hotel Property Limited. HPL share price. HPL Limited share price. Not this one. Yeah. Gone up about 4%. Let's see again Amara. Because comparative, right? You want to compare. Actually, it went down 4%. Okay. So you have to figure out why. Right. So these are things that you have to find out. And then you pick recovery play is still possible. Okay. After you check everything, oh yeah, actually it's just a non-issue. Then it's okay. So this is an example of what value counter looks like. So not for everybody, but some people really like this kind of investment. Okay, they prefer this because it's more solid, right? As you can see, it's backed by real assets in the real world. Whereas growth stocks generally may not have this kind of assets in the first. Okay, you need to sell, right? So just to complete, remember value stocks you need to sell one. Okay,